Welcome back to Alberta Primetime and the Vocal Point now. We'll examine our province's Fast Growth 50 with the Monday Money Panel tonight. Who or what is taking off in Alberta? And the U.S. government is operating on money it doesn't have, and even that will run out in February, March. Will Albertans be dragged over America's next fiscal cliff? Can we protect ourselves? Michael Ganley is in tonight. He is editor of Alberta Venture magazine. Shafik Hirani is a director at Investors Group Calgary. And Todd Hirsch, senior economist for ATB Financial, is here. Welcome back, everyone. Thanks for being here.
Thank you, Jennifer.
Thank you.
Todd, U.S. government spending cuts and tax hikes we heard about over the holidays. That's only the first fiscal cliff America could drag us all over. A debt ceiling is the next cliff. Explain the other looming crisis that's developing and the damage it could do from your view here in Alberta.
Yeah, well, if there's one thing Americans do well, it is political drama and political cliches. So now we can set aside the fiscal cliff for now. That'll come back again. But now we're back into talking about the debt ceiling. And a lot of viewers might remember back in the summer of 2011. That was the big issue that President Obama was dealing with in that time. Butting up against basically the credit card limit of the United States government had been reached, and it required an act of Congress in order to raise that debt ceiling. And they did some sort of stopgap measures, but all of this comes back now. They only kicked the can further down the road. Yeah. The can landed in February 2013. They're going to have to deal with this again. So now that we're behind more or less the fiscal cliff, they're kind of rappelling down the fiscal cliff, really. But now they're going to have to deal with this, raising the debt ceiling again and trying to come up with some sort of political compromise in Washington to do that.
The trouble is that in the meantime, it makes the economy falter. Mm-hmm. It tampers with our investment gains, just all kinds of trouble for everyone, even on this side of the border. And one of our fellow money panelists, Jane Alm from Angus Watt Advisory Group and National Bank Financial, provides this perspective. If the U.S. government's tax revenue, spending, or budget, it's new debt, it's national or old debt, and recent efforts at budget cuts were considered in the context of a family, that family would have yearly income of $21,700, would be spending over $38,000 a year, taking on over $16,000 in new debt, keeping an overall outstanding credit card balance of $142,000, and to deal with it, like Washington is, would be cutting spending, its family budget, by $385 for the entire year. Shafik, why is the public, when you consider the damage that can be done, why are other countries, you and me, seemingly so silent about the mismanagement?
You know, Jennifer, I think the reason is because the magnitude of the numbers, I mean, those numbers that you just went through, put it into perspective. When you add 10 zeros onto the end of these numbers, people just don't fathom just how broke the U.S. is. And the U.S. is in a very difficult situation. And like Todd was saying, the debt itself is sitting at $14.2 trillion. In February or March, it's going to hit $16.4 trillion, and they're going to have to raise the debt ceiling limit. Two things about this family, though. This family cannot change the rate that they're owing, and the U.S. actually controls the money supply. So they can do two different things. They can change the rate that they're borrowing at, and they've lowered rates to essentially zero. Mm-hmm. So they're now getting debt-free payments on their loans. And secondly, they can print more cash. This family can't print more cash, so they can inflate their way out of it. It's not going to help kicking the can down the road, but it is a short-term appeal.
Michael, does the average Albertan understand these issues? You're talking to Albertans every day at Alberta Venture magazine. Are businesses or individuals taking the U.S. situation into account as they plan their affairs for 2013?
Yes, I think so. I think the uncertainty is a real concern, and that's the ultimate problem there is that we just don't know which way it'll go, and these crises keep coming up. But I did like the way Terence Corcoran in the National Post framed it. He called it the Mayan Y2K fiscal cliff. I mean, some of it is just hysteria over the concern, and Shafik's absolutely right to point out that you can't really compare the family budget to the national budget. It can be more misleading than helpful, I think, and cause some more lack of clarity rather than helping to clarify the situation.
So help us out, Todd. What should we know realistically to perhaps be proactive when it comes to managing our assets, our real estate, our investments, that kind of thing?
Well, there's nothing, especially Canadians, there's nothing we can do about the situation in the United States except sort of sit back and hope and pray. All we can do here in Canada is make sure that our own fiscal house is in order, and that means provincially and federally, but also at a household basis, make sure that you have a plan in place for savings and investment. And that plan would have to be something that makes sense given the appropriateness of your own spending situation. But making sure that your own household debt is manageable and under control and that you've got a plan for saving, that's the best thing you can do in any scenario.
And Shafik, on specific investment portfolios, is it time to bail on U.S. holdings or not?
Absolutely not. And you know, I know a lot of people think that the U.S. is broke, but you have to understand the U.S. represents 60% of the world's GDP. You do not avoid that section. And then for some reason over the last century, the U.S. has always pulled a rabbit out of the hat, so that I assume that they're going to find another way to cut expenses, increase the deficit limit, debt ceiling, and bring in revenue. So they will find a way out of this.
And some of the economic indicators coming out of the U.S. now are more hopeful than they've been in years. The S&P 500 index is at the 5-year high. Even housing markets are coming back in a lot of places. And you know, there is some confidence in the actual U.S. underlying economy. It's just these political machinations and games that cause this uncertainty.
Good perspective from everybody. Next up, Alberta Venture magazine names its Fast Growth 50. What trends are taking shape for 2013 in our province, and what does it take to lead the pack in competitive Alberta? The Monday Money Panel returns with the latest on that here on Alberta Primetime in a moment. Welcome back to Alberta Primetime and the Monday Money Panel. Michael, Alberta Venture magazine has released its annual Fast Growth 50. Tell us about this list for 2013 overall, but also a few surprises.
Sure thing. Of course, it's much harder for a really big company to grow quickly, so it's a lot of smaller and mid-sized companies in there. Well, you see some really unique ones. They grow rapidly in different ways. Famoso Pizzeria, for instance, is on there. They do it through a franchise model. There's a company, Smoke Envy, that makes electronic cigarettes that you can smoke inside. They don't actually produce smoke. And they have a very international market over the internet, which has provided their growth. But the bread and butter of the list this year, you really see a resurgence of the oil and gas industry again, particularly the service sector in that way. And yeah, they're just making hay while the oil and gas industry is really quite healthy here right now.
Todd, tell us about that. What are your thoughts when you see the Fast Growth 50? The top companies on it are oil and gas related.
Yeah, well, I think the fact that they are small makes all the difference, and I'm happy to see those companies on that list. But the giants in the energy sector probably are not going to be having a fantastic year in 2013. So it will really be the year of the small business player in Alberta, and I think that speaks to the fact that these guys are nimble. They can move on a dime. They can find the opportunities very, very quickly where they need to, and they can move their assets around and their capital and equipment around very quickly.
That's right.
Shafik, what do you see taking off in 2013?
Yeah, you know, I'm with Mike on this one. I think Western Energy was the top pick, or the top growth. Yeah. I love this Alberta Venture magazine. I've loved the reports they put out. I know I always plug Mike's magazine. You know, the one thing is you have to be careful as an investor, and a good growth company does not always equate to a good growth stock. And I think as investors, you got to make sure that you're not just putting all your eggs in one basket and chasing stuff that's happened in the past. You want to make sure you're well diversified. Keep an eye on the company. It's very exciting, but like Todd is saying, also diversify into different sectors, different geographies, different market caps.
When Alberta Venture created this Fast Growth 50 list 15 years ago, were you able to compare this list now as it's developed compared to before and maybe give companies some advice or insight? What have you learned over the years?
Well, there are a lot of different lessons I think you can draw from this. I think one of the ways that companies often make the list is through a buy-up strategy, where they're buying up, say it's a drilling company, and they go after another drilling company that has 3 or 4 drills, and again, they kind of expand that way, and that's how they rapidly expand.
Okay. And Todd, aside from the Fast Growth 50, the companies that are able to really make a splash in their growth, what do you see in general for growth overall, including the big companies that just keep chugging along for 2013? What's the outlook?
Well, for the province, actually, I'm really bullish on a couple of sectors, agriculture and forestry, those two. Forestry, mostly because it's been, it's lagged really far behind a lot of other industries. But now we're finally starting to see some of those lumber prices and those panel board prices really picking up. A lot of that is due to the uptick in U.S. housing. So I think forestry will do well. I think agriculture will do well. I think the energy sector, I mean, that is still the driver of this provincial economy. But I think it'll only be sort of a moderate year for energy.
Shafik, you're watching a couple of things. One of them, housing numbers coming out. If we're talking about outlooks for 2013, what are we looking at seeing?
Yeah, Stats Canada is coming out with housing starts. We're looking at 200,000 housing starts. Hopefully, any number above that would be pretty bullish for the real estate and the stock market themselves. And we're looking at a 2 to 2.5% hopefully growth rate in the average home prices coming out on Thursday.
So Alberta looking fairly strong there as well. Michael, this issue is now put to bed. What's on your radar? What's next?
February issue. It's our money issue, our annual money issue. It's looking at both personal finance and corporate finance, advice, examples of successful financing options, companies that have done well through different options. So that's coming up in February. And I would just like to add, I'm going to be watching interest rates, Bank of Canada interest rates. It's very interesting. Great job numbers in Canada in December. If that continues, I think we'll see that overnight lending rate from the Bank of Canada go up sooner rather than later. And this ties back into all of our personal debt and what will happen to those, what we have to pay on that.
Do you agree with that, Todd? Are you watching there?
Well, I'm always watching the labor numbers. I think November and December, two exceptionally strong reports for Canada. I don't think they'll be repeated. I think at risk of maybe looking a little bit foolish in hindsight, I think they're a little bit one-off. I think that those labor numbers will cool. They just don't compare with output in Canada right now. So I think they might be a little bit of a statistical anomaly, but
another thing always on the minds of Albertans, the price of oil, Todd.
Yeah. Alberta seems to be a place where news, weather, and oil prices are reported at all moments in time. And there's a good reason for that. So much of our economy hangs on where those oil prices are. Now, we're seeing that WTI price back up above $90, about $93. But the Western Canadian Select number is the one that I'm going to be watching. That's the one that producers in this province actually receive. They don't get $97, $93 US for a barrel of oil. They're getting something closer to about $45, $48 a barrel. And that gap has been widening, so I'm going to be watching that. I think it might crimp the bottom lines of some of these energy companies this year.
Shafik, you've also brought to our attention a report by the Office of the Superintendent of Financial Institutions Canada, which oversees all banks, insurance companies and the like in our country. Private pensions taking a bit of a beating on an assessment from the OSFI.
Yeah, I'm actually surprised this hasn't gotten more media attention, because if you take a look at, they came out with a report, and they report directly to the finance minister, Mr. Flaherty. They came out saying that the private pension plans across Canada are materially in trouble, and there's a lot of unfunded liabilities, and it's something of grave concern they put in the report. And I suspect that'll start to catch more media attention in the upcoming weeks.
All right. Thank you all for your time tonight. Michael Ganley is editor of Alberta Venture magazine. Calgary's Shafik Hirani, a director at Investors Group Calgary, and Todd Hirsch, senior economist with ATB Financial. Thank you all.